Welcome to all. This is Venkatraman. Today we are going to talk about how to analyze stocks in part 3. Previous two videos we have discovered the shareholding pattern, growth of the company like that. Now we are going to talk about the sales of a company, which is an important factor. So how to analyze the sales? We have to see the sales of a company on a year-on-year basis. If the sales grows at 20% and above, it means the company is growing and it is a wealthy sign for the company. In case if there is an abnormal sales in a particular year, then also we have to note that why that year the sales growth is more, and we have to analyze that also. And similarly, if the sales growth of the company is decreasing proportional to that year-on-year basis, then we got to see that why that company has sales growth is decreasing. These are all the things just to analyze the stock only, not going deeper into it. And similarly, if the sales growth of the company or a stock is increasing, say above 20% and more, then that profit margin may be 30 to 15 percentage, which will increase the EPS. In turn, that share price will also increase. Hence, sales growth. That and another thing is that in the sales growth of the company after analyzing that sales growth, we have to take the company's commentary in the balance sheet or their order book position, that is the future order book position also we got to see, because if the future order book materializes, then it will also add sales growth of the company. In turn, it will increase the company's order book and sales growth, in turn profitability. So these are all the things. So what are the things we have to see? We have to see the sales growth of the company, for and how long we are, at what years we have to see. We have to analyze the sales growth of the company for the past 5 years by looking at the balance sheet of the company in each year, and we can identify that. And it should be a uniform range. It means the company's growth prospect is consistent. And the second thing is that order book we have to see from their commentaries or in their balance sheet. And then another thing is, now companies are declaring the results on quarter basis also. Quarter on quarter basis, we have to see what is the percentage of growth from the last quarter to this quarter. But it is only an indication quarter on quarter basis, because the growth of the company means per year we have to see the gap period. We should not decide even on a quarter on quarter basis. We should not decide about the company's prospects by picking the stocks. Most important is the year on year basis, and quarter on quarter basis we got to see the sales performance of the company for reference. So what is the future order book? That also they will mention in the quarterly report also. In that way, we have to see the sales growth of the company, which forms an important aspect in analyzing the stocks. Thank you for watching this video.